Welcome back to Mining Stock Daily. Ian Wagner here, live from Frankfurt for the Deutsche Goldmesse. We are going to have a catch-up here with our friends at Cartier Resources. They are a gold developer in Quebec with their flagship Cadillac project. They trade on the TSX Venture with the symbol ECR and host a market cap of roughly $100 million Canadian. With us today is the CEO of Cartier, Mr. Philippe Cloutier. Philippe, welcome to Frankfurt and welcome back to the podcast.
Well, thank you, Ian. And I'll chime in by adding that recently we're trading on the OTCQB with the ticker symbol ECRFF. There you go.
There you go. Okay. And I should note, we have covered the Cartier story for quite some time. So I would encourage any first-time listeners to go back to previous episodes if they want to learn more. Okay, Philippe, let's jump right in. Cadillac, 3 million ounces in Val d'Or in the Abitibi, 2.2 grams per ton, grade measured and indicated. But recent news, you guys really just this week announced some results of your metallurgical test program. I wonder if you could kind of give some color around that and what you found and kind of what's the takeaway there.
Yeah, well, as you know, the Chimo mine itself is a past producing gold mine. It produced in the 1960s, in the 1980s, and then finally in the 1990s, and shut down in 1997. As you know, not for lack of ore, but really because the price of gold back then was $400 US. But another thing is that they never really had a mill on site, and they were toll milling. So they never were able to get the efficiencies of, tweaking their own mill. And so the recoveries back then were in the 90% range. And we all knew, even some of the seniors are looking at us had said, Phil, you're going to have to go back and do some metallurgical test work because what gives? Most of mine recoveries on the Cadillac are 95 to 97%. And so we launched the test work in November of 2025, and we just got the results recently. And indeed, as you mentioned, we're hitting numbers that are in line with what the traditional vein-hosted type gold is in the Abitibi, which is 97% or upper 96%. So we've gained a 7% gold increase in this with this metallurgical study. For one, for two. The second point is we've grown the resource from 2.3 million ounces in the previous resource assessment to the most recent one, which is 3.2 million ounces, as you mentioned. And the third point that I'd like to mention is our previous PEA, preliminary economic assessment, was done in 2023 using a price of gold of $1,750 US. Now the price of gold is hovering between 4,700 to 5,000 US. So you got three very important elements here for the next internal scoping work that we're doing at the project, namely an increased resource, an increased metallurgical recovery, and an increase of price of gold. So you see where that's going.
Three positive catalysts.
Three positive catalysts for our next economic assessment of this deposit, or these deposits, actually.
Yeah, and I'm glad you went there because I'll just ask you, about that. You sort of have toll milling versus own mill, open pit versus underground. Mm-hmm. Obviously, recoveries are high now. The Hope target. I don't know if it requires a complete rethink, but all these positive developments. Do you think of this PEA as sort of a moving target, or do you feel like you know what you want to do in terms of a mine plan, and then how, any color around timing of that?
No, it is a moving target. There are various iterations and permutations amongst those iterations that need to be done. As you mentioned, if you do a standalone, build your own mill versus do some toll milling or part-time toll milling to eventually build your own mill, whether you go underground or you do underground and surface mining, whether you access via ramp, or use the old shaft to go back down underground. Each one of those scenarios or hybrid scenarios has an economic pathway, right? And so it speaks to a vast audience. We could actually say, well, we want to speak only to big producers, and then publish something that will only be understandable to them. Or we could decide to speak only to retail to come up with some fluffy, impressive numbers. But I think the greater audience out there are the junior and intermediate producers that are hungry because there's an emerging M&A market out there. And we need to service as the biggest audience that we can, and also keep in our back pocket the build it yourself approach, right? You never know. Right now, we have I think is a low share price, largely because it's an unrecognized story. And that's why we've increased our marketing. Recently, I've been out to Asia. I'm in Europe quite often these days. And with the OTC QB trading, we're going to be making inroads to the US. Now, the reason for that is to bring our story to the right people so that we could be trading at the right share price and offer even more avenues and more alternatives going forward for our story.
Okay. I want to ask you about the valuation, but I do want to just put a button on that PEA or those economic numbers. I guess just at what point do you sort of decide to freeze the inputs and say, okay, we're gonna put numbers on it, even if the resource is still growing, rather than sort of wait for that perfect picture? Like, is that something you think will happen this year, or is that a 2027? Or
no, I think it's something that's going to happen this year. And the unknowns right now are, every time we meet a group, believe it or not, they kind of slip and say, well, why don't you do it this way? And then when we run that situation or that scenario and say, well, look at that, that's neat, a hybrid approach or a staged approach to mining or development that caters to an even wider audience, people that look at the project and say, well, we're going to go at it with a very low capex, and then we'll build it into something bigger with time. So right now, we're pacing ourselves, but if you could shut your eyes and try to imagine the Lassonde curve and that first hump, well, we're near that. We're at the top of that first hump. And that's where you need to do optimal critical path thinking and decide, well, do I subject our shareholders to that orphan period, that trough there with the feasibility and all that, or do we come up with a creative joint venture approach where we build a bridge between the first hump and the second hump, or do we do the M&A? And that's it's happening. We've seen several acquisitions and mergers in our own district, which point to the fact that it's heating up. Right, the seniors have done their work. They're merging amongst themselves and things like that. But we need to think of our shareholders and how to reward them in the short term. The easiest way, I think, is getting the story out there. And once that's done, I think we'll see a price appreciation.
Yeah, and I would argue, not argue, but just point out. So, you guys, one of your strategic investors, is Agnico Eagle, right?
Yeah.
A major 27% owner. You mentioned valuation, and I guess, how do you think about catalysts for re-rating? Is that essentially a story, or is it sort of like we want to do this, accomplish this 100,000 meters and show XYZ to the market, and then we think that will re-rate? Or how do you think about, just catalysts for that?
Clearly. So one of our catalysts a year ago was to launch this 100,000 meter diamond drill program, thinking unconventionally. That is, our objective was to demonstrate that we have a mining camp, and reverse engineer the program and distribute the holes along that 15-kilometer stretch to show that. Well, we've only done 35% of the program, and we've accomplished 100% of our objectives, namely because we've discovered the new contact zone to the northeast, 5 or 6 kilometers northeast of the past-producing Chima, where bulk of the resource are, because we've also discovered a new Canadian Malartic Odyssey-type target that's highly reminiscent of the Osisko-Agnico success, just down the highway.
That's hope.
That's hope. We've had continued success on the main zone and the portal zone. So we're in the midst of redesigning the entire program. And then there's the suggestions or recommendations done by the engineering group to say, well, listen, if you want to fast track this to production, this is what you have to do. So we are currently tasked with looking and coming up with budgets for all of these scenarios and choosing the ones that will make the most sense. So the catalysts are not only in the new discoveries that we've done, catalysts are not only in the metallurgical and the future engineering stuff that we've launched. The catalyst is not only in the upcoming new scoping study that we're going to undoubtedly we're going to publish at one point. So the news flow and the shareholders could be on the lookout for some really robust and interesting news. But just getting our story out there. I mean, one of our main faults was that we weren't really marketing in the last 2 or 3 years because we were in limbo. And I'm a geologist, so it's not my strong point. It's not my skill set. And then mostly because I guess, when you have a shareholder like Agnico, you say, well, do I really need to market? But in the last few years, we've been marketing in Europe, and we've gone from 0 shareholders in Europe to now 21%. They've caught up to Agnico, and by the end of the year, I think they will surpass Agnico in the weight of the representation as a shareholder. And I believe that we're going to gain shareholders in Asia and North America, mainly US, and that's going to change the picture. Simply a share price, a repositioning of our share price closer to where it should be is going to be a catalyst in itself.
Excellent. Well, listen, I think that's a good place to leave it for today, Philippe. I appreciate you coming by and taking some time.
Well, thank you very much. So keep doing your homework, people out there, and I think you're going to appreciate what we've done and where we're going with Cartier.
Yeah, we'll look to catch up to you throughout the summer as well and into the fall. That's Philippe Cloutier, CEO of Cartier Resources. They trade on the TSX Venture under the symbol ECR and
OTCQB under the symbol ECRFF.
Perfect. Thanks so much, Philippe.
The information presented should not be considered investment advice. Mining Stock Daily and its affiliates are not responsible for any loss arising from any investment decision in connection with the material presented herein. Please do your own research or speak with a licensed financial representative before making any investment decisions.